Good afternoon, YouTube people. Today is, I don't even know what day it is. Wednesday, January 11th here, coming to you live from the new year, 2023. And market's set to close here in a little over about 40 minutes. And I just wanted to keep the diversification rolling because I'm that damn awesome. I'm always upfront, straightforward with you guys. I'm bringing you multiple different companies in different sectors, whether they're large cap, dividend paying blue chips, or whether they're penny stocks with absolutely no income and revenue. We look at all angles. We look at all investments here on this channel. But this situation is more of a longer term portfolio play. And I know you may hear that and immediately get bored and not want to hear me out. But I'm asking you to just sit back, relax, and just take in any words, any advice that I may have the potential to share with you here in the next couple of minutes. Name of the company, Raytheon Technologies. Ticker symbol RTX, listed here on the New York Stock Exchange. Now, as we see here, market's continuously climbing throughout the afternoon. Dow now up over 230 points, reapproaching 34,000 for reasons unbeknownst to me. But right now, this stock trading at 99.73, down about 0.2% on the day. We have a market cap of 146 billion. We have a PE north of 30. We have a dividend yield north of 2%. We are getting paid to own the stock. Year low 80.27, year high 106.02. So this is more near the top of the range. Not really an indicator, but little background. This company, defense sector. Here we go. Raytheon Technology manufactures aircraft engines, avionics, aerostructures, cybersecurity, guided missiles, air defensive satellites, drones. So they have their fingers in a shit ton of pies, so to speak, right? And if we switch over here quarterly, we can see some bounces. See here, we're going from 17 billion down to 15 billion. However, the whole time net income positive, and even bouncing around, they're still maintaining these levels of revenue, right? 16.2 billion, 17 down to 15.7. 16.3, 17, right? So we may have these short hiccups, but overall, this company is just really kicking ass, taking names. And if we switch over annually, you can see almost 60 billion, had a massive pullback to about 34 billion, and over the years, look at the climb, 34 to 45 to 56 to 64, right? So this company, in my eyes, is really looking pretty well. 64 billion for the year. Why am I on Apple? 64 billion for the year, and 146 billion market cap. So we're trading what, maybe like 2.35, 2.4 times 2021 revenue, which isn't too bad. Could be considered fair valued. I don't know if I would necessarily say it's undervalued. However, long term, this could be a good play here. PE north of 30 could probably sell off a couple of dollars and lower that ratio to make it a little bit more attractive. But quarterly here, 2022, we got what? 15.7, 16.3, so that's what? 32 billion, and then 17, so now we're up to 49 billion. And let's just say like another 16 will be 65 billion. Switching back to annually, that is slightly above the revenue that they brought in for 21, if they maintain these levels for 22. Net income, 386 billion. We switch back here, we see net income 108 billion, 13, so we're at 2.38 billion, 139, so we're at 3.77 billion. And then let's say like another 1.3, that'll be 3.7, so that'll be like 5 billion net income, right? Previous year 3.86 billion. So revenue on track to increase year over year, net income on track to increase year over year. And these are the situations. This is why I know it's very boring, but this is why sometimes long-term portfolios are key, right? Because it is very boring, it does take several years, it's not exciting, and you don't have to look at it every day. However, again, doing a DRIP, which stands for Dividend Reinvestment Program, to consistently get paid to own a stock, reinvest it into more shares. Then the next time they pay a dividend, it's even greater because you own more shares, and so on and so forth, right? This is when, that's what I mean when I speak about compound dividend investing. So again, we do have the potential to pull back a little bit. However, not too shabby. I'll get back to the numbers in a second. Look, this is a one-year chart. I scrolled out. It's showing green on the bottom here for the EPS, not necessarily the revenue. If I show you a quarter, see? They missed slightly on the revenue side, beat on the EPS, but still green. So if we go back just from an EPS standpoint, as we can see, this is going back to the middle of 2011, right? So we're looking at like a 12-year chart here. 11.5-year chart. As you can see, one miss on the EPS side. One miss in 11 years. 4 quarterly reports a year. That is 44 quarterly earning reports. And this company missed on the EPS side once. That is definitely nothing to sneeze at. Again, yes, the revenue has bounced around. As we can see, minus big market sell-offs, the company is really just slowly climbing over the years. And I wanted to get into the numbers again. I had them up when we first came over here. We look at the financials, and I wanted to show you here again the earnings. We switch over here annually. And you can see, look at this. They take the hit, of course, in 2020. 2021 brought in $4.27 per share. And look at this, 476, 503, 598, 679 by 2025. This is phenomenal growth. And if we switch over here, even on the revenue side, again, they were rocking and rolling here, took a little bit of a hit going into 2020, and now look, 67, 72, 78, 83.5 billion. So this company, inside of about the next 24 months, it is forecasted to really start rocking it. Well, excuse me, more like 36 to 48 months. The heck am I talking about? But again, this company is really set to start rocking and rolling. And again, these are supposedly the analysts giving their estimates and their forecasts, right? These guys, they've crossed every T, they've dotted every I. So, I mean, chances are we'll most likely be somewhere in the ballpark of these numbers. And again, even if they come in slightly below, I mean, that's still phenomenal EPS and revenue growth over the years. You really can't knock it. Wanted to switch over here to the stats real quick. And if we check out the ratios and our profitability ratios here, valuation ratio, as we see PE, this is basically the highest it's been going back to 2015, usually maintained high teens, low 20s, now in the low 30s, right? So that's why I was saying, it does look attractive, but also at the same time at 99.71, it could potentially pull back to like 93, 92, 91, and then you could, position yourself in at a little bit of a more advantageous price. Price to sales, as we see, has basically been sub 2 for many years. 2019 jumps up to almost 3. Right, as we see back to the high 1s, back to 2, now about 2.25. Price to cash flow, again, low, mid, high teens at points, as high as 27 price to cash flow ratio, pulls back to 18, re-jumps back up to 26. And the price to book right now, a little over 2, and as we see, was historically, for many years, at about the 3 range, even almost 2.5, right? Back up to 3 range. So again, they took the hiccup 2020, 2021. Now it's slightly climbing. It's back above 2. So yeah, that's why if this does rebound to 3, I mean, we're talking about like $140 stock. So we definitely have some potential here, especially in the long term. We look at the profitability ratios quickly, and you can see about 4.5, we have high 5s, and then this is 2019, it dips down to 2.5, and then of course goes negative in 2020, like so many other companies we saw, makes a big rebound to basically go back to where it was, right, 2.4%, now 2.8%. So the company is slowly coming out of this hole that was basically made for it. Return on equity, we're seeing some healthy double digits here. Drops down to 8.4%, of course goes negative. Completely rebounds here, 5.3%, now 6.3%. Phenomenal. Return on invested capital, healthy single digits, double digits at some time. 2016. Double digits got above 10.5%. Then started to pull back to low single digits, of course, 2020, negative. Rebounds to 3.7%, right now 4.3%. So they are slowly trending in the right direction. Gross margin percentage, healthy, mid-20, high 20 percentile. Comes back to sub 16, back up to 19, now 20.5. Operating margin, same thing. Healthy double digits, drops to single digits, doesn't go negative, jumps up, look at that, 200% almost, up to 7.25%, now 8.5%. EBITDA, again, earnings before interest, taxes, depreciation, amortization, was healthy double digits, pulls back to single digits slightly, rebounds to almost 14%, now 14.6%. The net margin we looked at before, again, they were very stable and profitable for many years, dropped down negative, completely rebounded in 21, now currently sitting north of 8%. So this company is rocking and rolling. But if we look at the charts here, you can see here on the weekly, you got the 50-day moving average 93.60, mid-Bollinger Band about 92.5. But the good thing is, see, this is why I like slow, steady growth. Look at this 200-day moving average, which again, as we know, with companies like this is now a higher low, so to speak. So this was 65, and now over the years it's up to almost 78, which is right at the bottom Bollinger Band now. So that could potentially be your quote-unquote shit hit the fan sell-off from 99 to 78, which, as we know, is far, far less than a lot of other small cap speculative companies that we saw, right? We have companies, this is why you don't want a company to go up too high too fast, because if this really exploded faster than this slow steady growth, this moving average bottom might be down here like 50, right? Then you have the potential for a 50% sell-off as opposed to a 20-25% potential sell-off here. So you could have a pullback here to the low 90s. I think, in my opinion, that's what's going to happen. Looks like the MACD is curling here. RSI was pretty high here, 65. Could potentially have had a double top there on the RSI, but I don't really know if that's a technical that you want to follow. But we switch over here to the daily. RSI again, low 50s, right? So it's mid-range. The company has been consistently bouncing off the mid-Bollinger Band, it looks like, for the last couple of weeks. And the 50-day moving average, as we see, 92, as low as about 86, now back up to 98. And the 200-day moving average is slowly, steadily climbing, 92, 93.11 now. So again, 93.11 MACD pulling back also. So we do have the potential to pull back and sell off several dollars here. Again, keep that in mind, 93.11. Switch back to the weekly. Oh, look, moving average 93.50, 59, right? Mid-Bollinger Band 92.50. That's why I was saying if we can have a pullback to the low 90s, maybe 93, 92.5, then in my opinion, you might want to strike while the iron's hot. You're grabbing $98, $99, $100 stock at, a 7-8% discount. So why not, right? But, basically I'm going to leave it there. But I just wanted to show you a quick overview of, a longer-term investment. Again, this is in the defense sector. We do a lot of defense spending here in this country. I believe as much as the next 24 or 25 countries combined. So to take one or two positions long-term in the defense sector might not be the worst idea, right? But I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. It means a lot to me. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. Helps me get a few more eyes on the channel. If you like the content I'm putting out, please push the subscribe button. So it, gives me a good feeling just watching the community slowly grow here, having more and more interactions in the Discord, if you'd like, in the description, or even more and more interactions in the comments section. It doesn't matter to me. I just like to keep an open ear and keep the discussion open. But yeah, we'll leave it there. And like I always say, I understand markets are rocky, they're volatile, they're uncertain. So I wish everyone success. I hope everyone makes a couple of dollars, and I'll see you guys in the next video. Take care.